The first full trading week of 2015 is right now underway. Not much on the economic data front today, but the markets will have some big reports to digest later in the week. Joining me now is PNC Asset Management's Chief Investment Strategist, Bill Stone. Hi, Bill.
Hello.
So let's get to the big jobs data in a bit. But first, at the end of last year, you said the Santa Claus rally is an omen to this year. Santa did come to Wall Street this past Christmas. How does that play into what to expect?
Well, interestingly enough, so at least the time frame that we kind of measure Santa Claus is not quite over yet, but because we actually take it through the first 2 trading days of this year, and obviously given the start of this year and the very tail end of last year, honestly, according to our measures, is not too good of a Santa Claus rally at all. In fact, the Grinch so far has control of things, so not a good omen so far this year.
And the Grinch may be falling oil prices. The markets are getting hit really hard right now by falling prices. Maybe it's the lack of data on tap today and traders are focusing more on oil. Either way, the Dow is down triple digits. You think the decline in oil prices a net positive for the U.S. economy, but that there will be winners and losers. Tell us more on who you think will gain and lose from falling oil prices.
Yeah, thanks. I think to keep the analogy going, I do think the oil Grinch will grow a big heart and actually end up helping things out. The winner-wise, it's kind of amazing because so many people worry about, say, the U.S., Europe, and maybe even Japan, but really those three, I'm sorry, in particular, should all benefit because they're net importers of oil. There's a little more complication with Europe and Japan because of the worry about deflation or at least disinflation. So there's some there, but I still view it as a net positive. When you think about some other winners and losers, certainly, I mean, it's easy to go the oil producers, that those are going to continue to suffer, certainly at these kind of prices. I think a lot of people kind of lose track of high yield bonds tend to be losers at this kind of low prices because much of that index is heavily weighted towards oil producers that are leveraged to higher oil prices.
And finally, Bill, the big jobs report for December is out this Friday. You're expecting a slight decline in unemployment rate, but do you think the jobs market is getting stronger for middle class in this country with good paying substantial jobs?
Yeah, I think actually, interestingly enough, I think it's fair enough to say about the job recovery that it hasn't been as fast enough or as fast as anybody would like. But honestly, at least some work that our economics team did would point that it hasn't really been a lack of good jobs that's been the problem in this kind of recovery. It's just been the pace of the recovery has been subpar on the overall. But certainly last year things sped up quite a bit, and hopefully we take that momentum into this year.
Great. So slow but steady?
I hope so. And if we keep any sort of close to pace to last year, that's actually a very nice pace.
Great. Thanks so much for speaking with me today, Bill.
You're welcome.
So Bill Stone is the Chief Investment Strategist at PNC Asset Management, and I'm Susanna Lee for The Street.